Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so just to remind you, I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the very significant lows of 2021 at 15,665, which led to the lows of late November 23, plus the lows of 24, most recently in late October, November and early December, and I suppose also the congestion in January and February this year. So I will now reprise part of my commentary, the same part of the commentary I've been given here for many, many months now, and I quote, and I've got no excuses, I don't care about it, I really think this is important. It's this point that I feel obliged once again to mention the big descending scallop pattern I had been going on about for months and months and months, what it may mean within the near-term universe. So the key level had been the low at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below this could give a downside potential for the descending scallop pattern down in the 13,830 zone. End of quote. 2 weeks ago I added, and I quote, "For a while I even started thinking this pattern's time had come and gone and maybe I should retire it completely, but I didn't." Well, for you, we definitely had, as I said, a significant move, one you would recognize when you saw it, and prices dropped down like a stone, down to the 13,830 zone with a low at 13,865. All in all, it is satisfying to see such a move down to a target I've been prattling on about for many, many months. And to do it in a way that I suspected it might. As for what's next, well, we have just reached the end of a huge move, and I think it requires some more thought and observation to see what will be next. End of quote. So my observations, a couple of weeks onwards, are these. The levels of 15,840, especially the low of 2021 at 15,665, are still key. We have seen late last week with 15,665, with just above it the flatlining mauve medium moving average 15,700 and the green short medium moving average currently at 15,745. Now above these we have the dark blue July 24 to November 25 head and shoulders neckline, currently at 15,965, and the gold long moving average currently at 16,090. Meanwhile below we have the 50% Fibonacci line for 2025 at 15,325, which acted as a base of action the early part of last week, along with the newly drawn bright red middle time, currently at 15,165 of the early October 24 to mid-March 25 bearish shift pitch walk. This middle time is still not validated, not yet, but the lower time, currently at 13,885, helped halt the fall last week, 2 weeks ago, sorry, and it was last week as well, last week and 2 weeks ago, on a closing basis, and arguably also partially on a low basis, along with the October 2020 low at 14,040. I am now contemplating whether the action since at least March to date, and possibly as far back as November 2024 to date, is a diving board pattern, which is a bullish recovery and reversal back upwards after a sharp drop. Thus, the action until the end of March could be seen as the diving board approach. The start of April until the middle of the month is the plunge, and since the first third of April, the recovery back upwards, or the return to the surface, and is the return to the surface and the climb out of the water. Nearly 9 out of 10 such patterns see a move up to the base of the diving board, which is the 16,000 area. A quarter stopped rising within the diving board, which would here, I think, be between 16,000 to 16,780. And about 2/3 of such patterns see a move higher than the initial approach onto the diving board. That is over the March high at 16,780. It will be interesting to see how this pattern develops. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns that may have affected this market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 2023 bullish shift pitch walk that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle times. This one would not die. Even when I thought 2 weeks ago that had finally expired, it still influenced the market. I still have it on my daily chart as the lower time, currently at 26.26, had been acting as a support, then a resistance, then a support, and today once more as a resistance, along with the March 2021 low at 26.27. I'm also starting to look at the newly drawn bright green middle time, currently 25.94, of the mid-December 24 to mid-March this year bearish Andrews pitchfork as an attractor, and as it is departing lower away from the dark blue lower time, separating away, and begins to wonder which the market will follow, the mildly bullish dark blue lower time or the bright green bearish middle time. Going back a bit, the decline 4 weeks ago was prompted by the break lower below the neckline, currently 28.63 of the early January to early March this year reverse head and shoulders continuation pattern. So what else have we to look out for? Well, further down we have the lows in early August last year, of 25.49 and 25.59 and 25.63, as well as the important 2021 low at 25.47 that prompted those lows in August in the first place. So far, they have seemingly been a base for this market, including late last week. To this end, I would also draw your attention to another feature, one I highlighted 2 weeks ago, and I quote, "The March 2020 today uptrend, below, currently at 24.87, highlighted in purple on my daily chart. I'm not sure how good this would be, as it has been finessed a number of times before, but it's still nevertheless there and ought not to be ignored." End of quote. I suspect that the proximity of this uptrend has also been influencing the standstill seen last week and the week before. Meanwhile, topside, I'd keep an eye upon the 50% Fibonacci of the whole March to April move at 27.55. Now, this is not the whole of the 2025 action, just a major move in the last few weeks, as well as nearby the declining short medium moving average, currently at 28.21, the medium moving average, currently at 28.82. This last one formed 2 weeks ago a dead cross with the declining gold long moving average, currently at 2900. Additionally, do not ignore the bright green upper time overhead, currently at 28.32. LME 3-month tin. An extraordinary significant move, and one that, as I said last week, technical analysis worked on quite well. So, as in some of the other metals I've discussed, there are a number of patterns here affecting this market. Now, prices did indeed halt on Monday 2 weeks ago, right on the dark blue lower time, currently at 32.050 of the November 23 to November 24 bullish shift pitchfork. Bouncing up for a day, but 2 Wednesdays ago, prices plummeted further, down to the July 2011 high at 29.005. On the way down, it passed through the nearby gold long moving average, currently at 31.395, and the mauve medium moving average, currently 31.435, closing below both before turning back up again last Monday. Then on Tuesday last week, dropping down again, though not as far this time. Now, going back a bit, prices did also breach but did not close below congestion between 29.880 to 30.205, as well as the bright red neckline extension, currently at 29.845 of the October 23 to January 24 reverse head and shoulders bottom. However, the move up is now capped this time by those same mauve medium moving average and gold long moving averages, plus early last week the dark blue lower time and the new resistance that really didn't show itself before, which is the 50%, and that dark blue is from the underside, the 50% Fibonacci line of the March 20 to March 22 move at 31.845. Sitting above all these, we have the purple neckline, currently 32.425 of the April 24 head and shoulders continuation pattern. Yes, that one, the tall thin one. With above that, the short medium moving average, which is currently at 33.080. And the neckline of the August to November 2024 head and shoulders pattern, currently at 33.575. Then one of the previous all-time highs, back in April 2011, up at 33.605, until we reach the 50% Fibonacci line of this big April 25 move at 33,660. Do I think it might reach back up that high? Well, right now I have my doubts, especially as we eroded some of the downside last week. But this 50% Fibonacci line is right now a key level topside. However, for now I'll keep an eye on a dark blue breach lower time in case we see the market try and run along the underside of it, and also keep a watchful eye on a congestion between 29,880 to 30,205. Now, one final thing. Last week I said, and I quote, I have been tempted to draw either a new bullish Andrews or Shift pitchfork with a late November 24 to mid-April action. So far I have not succumbed, but I will be considering it, especially if we start approaching that 50% Fibonacci line overhead at 33,660. End of quote. Well, this week I've chosen to succumb, and I've drawn a bright green late November 24 to mid-April 25 bullish Andrews pitchfork. We're at now, by moving sideways, edging down towards the lower time. That's currently at 29,435, though this pitchfork has not as yet been tested on any of its tines.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.